All right, so we had that inflation numbers for February. It's all about inflation reporting now for major economies, and Nigeria is not left out. We have 23.18% for February, down from 24.48% in January, and that's according to the National Bureau of Statistics. And these are the that's after the base year. That's the rebasement. Now we have this new figure. So the latest number shows 1.30% decrease. That's 3.0 in the headline inflation rate compared to the previous month. So definitely a lot to unpack there, because we've heard a lot about these rebase numbers and how much our inflation has dropped ever since then. But are we feeling it when we go to the stores? That's definitely the big question there. And to help us unpack this, we have our very own Mr. Bismarck Urani, the CEO of Financial Derivatives Company, joining me right here in the studio. It's great to have you, sir.
Yeah, good morning. Nice to be here.
Yes, and definitely it's all about inflation. I'm just wondering if a time will come when we'll stop talking so much about inflation. There was a time that it was okay. It wasn't always in the news.
Okay, let me try and break it down. You see, there's what you call a natural rate of inflation.
Right.
When inflation is within a particular range and doesn't disturb anybody. There's what we call hyperinflation, or what we call spiraling inflation, runaway inflation, and all of that. Depends on what stage and how it's changing. You will not talk about it if it's stable, right? And if it's not far away from the natural rate of inflation. But you will talk about it when there's volatility, and then people begin to price themselves. What do? They price their wages against it. They price their goods against it. Even your wife will ask for money based on it. And your children will talk about it. Schools will. So everything is based on pricing. And so that measurement of the change in price rate, price level, which is called inflation, or in some cases disinflation when it's coming down, or deflation when it's actually dropping sharply. What we've seen today or yesterday was new methodology and new rates. But what is constant is that even if you use the old methodology, which it came down from 33 to 32, or you use the new methodology where it came down from 24 to 23.18, the trend is that its prices are declining. Then you ask yourself the fundamental question: is this price change transient, or is it structural? If it is transient, it means that seasonality and other things play, and then it will come back again. If it is structural, it means that there's some more work to be done to remove the structural rigidities. So what has happened is that core inflation actually increased, which means that there are structural factors that still need to be dealt with. Transient factors like seasonality, harvest, Hajj, and all of those things are playing into it, or exchange rate movements. So 1% drop in inflation, not a big deal. So, but if you look at it and say, okay, we brought inflation down from 33 to 24, it gives you the impression that you're doing something fantastic. No, you have to compare likes with likes. So as far as we're concerned, there's a 1% drop. But a 1% drop in inflation is moving in the right direction, is good. Now what's going to happen next? And how does this reflect in other factors, right? So that is where the unions are going to be asking for something. Well, minimum wage are going to be asking. The people in the markets are going to be, the people trading in the foreign exchange market, people trading on the stock exchange who say, because inflation declined, and you were saying today, we think that the stock market will be positive, because if inflation declines, the conventional logic means that the central bank will, in May, bring down the MPR, or at least stay constant, which means that there's an attraction to buy equities. So I would not be surprised today I will see the equities actually beginning to improve and all of that. So I think that's the most important thing.
Right, and definitely, when you remember that trending issue about the copper complaining about, rising cost and all of that. So there's obviously that dissatisfaction.
There are two variables there. One is rising cost. The other one is that the National Youth Service, I understand, have not paid the new minimum wage, which is 10% above the minimum wage. So the coppers are supposed to be getting 77,000. If it is true that they're actually getting 33,000, there's a big gap there of 40,000. So the pain point could be, pay me my new minimum wage, but also do something about price level. So those could be the thing, and it cannot be ignored. Maybe she's coming out to say it, but others who are not saying it are grumbling in, somewhere.
Right, and definitely looking at this trend that's building right now,
yes.
it's a silver lining. If you look at it. So what should the government be doing now to actually help fast track this, and we can actually feel it when we get to the stores?
No, you see, you got to differentiate between structural issues and transient issues. The transient issues will disappear. So there's nothing you can do about that. If once, for example, pawpaw is in season or tomatoes in season, the price comes down. Once it's out of season and it's planting, it goes back up. But if for any reason the road network gets bad, if for any reason the price of diesel or petrol was to increase, then it has a knock-on effect on the price of goods. That is more structural. So if you want to deal with aggregate factors, that's okay. Now let's get the diesel down to 1,000. It affects the cost of calls in base stations, it affects the cost of transportation, it affects the cost of using your generators and all of that. That's more structural. When we see that begin to happen, then we now know that, yes, this is happening. Another factor we've seen is wage restraint. That is, people are not buying because they don't have the money to buy. That's pretty fundamental. So one, either they increase their productivity to ask for more wages, or to cut back on their consumption. All of those have an effect. But again, it's interesting that we've seen inflation go in one direction for such a long time. The fact that we could see a point of inflection and take a breather means that everybody has to take a look at it. And the government of federal government of Nigeria, state governments have to now look at their spending, the money supply growth, the leakages in the system, and to some extent some profligacy. We need to bring all of these things together, and we'll see that this trend can be sustained. If not, if it turns around, it could turn around with a vengeance. But one thing you must notice that there's a correlation between this and the exchange rate. We've seen this trend of disinflation, and it coincides with the exchange rate appreciating. But the exchange rate for about 3, 4, 5 weeks has appreciated. Now it has stopped and it started going back up. But not too far away, because the exchange rate is closer to equilibrium than it was before. So we do not expect volatile moves, right? But it is something that people have to keep in view. That if the exchange rate is depreciating, it passes through to domestic prices. If the exchange rate is appreciating, it should technically pass through to domestic prices. But the thing about this market is that what we're seeing, Dangote is selling, the recommended retail price for petrol today is 815. But as we speak, they're still selling at 860, making about a 40 naira spread on actually benefiting from the injustices of the system. The middlemen and the retailers are doing that. That has to stop, right? How do you can't police it, but the only way is that those guys who are, if the price is 815 naira, there's no reason why MRS, NNPC, and everybody should not be selling at 815 naira.
Right.
They can't be gouging the people.
Right.
If the price went up, they would automatically increase it.
Yes.
Now that it's come down,
it's always sticky to the upside, in this part.
That's the problem. So
and we also see oil marketers under Petron, they're calling for regulation, mandating fuel prices be adjusted only every 6 months. Right. And it seems, the marketers seem to be feeling the heat here.
Yeah, that's when it comes to they are marketers pricing. And they're speculators. Right. Everybody, there are middlemen who have actually become parasites of the system. They need to understand that prices move in every direction, and that you are only carrying your inventory. Right? The price of your inventory is such that you have to adjust every now and again. Sometimes you make some money, at times you lose some money, but in the final analysis, you make money, but it's a high volume, thin margin product. It's not for quick kills. And they did announce some of the losses they've been making. No, but when they make profits, they didn't announce the profits. Oh, okay. No, so I mean, that's selective inattention. It doesn't, it's not, doesn't play out with me. But one thing though is that we are looking at 3 variables. One, the price of oil and Brent has gone up slightly, but that's fine for us. But cocoa has dropped below $8,000, now $7,800. And LNG has also dropped by 0.85%. So if you are taking three variables that contribute to our balance of trade and the strength of our naira, we've seen that cocoa has come down, LNG has come down, even though combined they're not as much as oil, and oil has gone up just marginally, but still way $4 below our benchmark price. So there's a lot of work to be done in terms of managing the economy so that we can have macroeconomic stability.
Right.
But also the other thing is to manage expectations, because what we see in Nigeria as an economist is a crisis of false expectation. People just think that, one, they are not participants in the economy. As a consumer, you're a participant. That your role, what we call the function, the consumption function and savings function, plays a significant part in macroeconomic stability. So don't have false expectations. Do what you have to do, and that what goes up will come down.
Right. Hopefully. When it goes up, it comes down. But, we'll continue this conversation in a moment. We'll just take a quick pause now, and we'll find out what to do, when it comes to expectations, what's playing out in the commodities market. That's the moment. Do stay with us. Welcome back. You're still watching Business Morning, and we're right here at our studios, the trading floor of the NGX. I still have Mr. Bismarck Urwani. We're unpacking the inflation numbers and talking about expectations. Mr. Urwani, definitely is a negative when you always expect that prices will go up. Yeah. Definitely. So, looking at what's playing out so far, we know the CBN, they're going to be meeting sometime in May, and they've had about two. There's going to be another one in March and another one in April. So with all of this data we're seeing, what's the next decision for this MPC?
Well, it's difficult to say. I can't, it's like asking me whether it's going to rain tomorrow.
Right.
But the reality is that if the trend continues, right, the likelihood is that you don't just cut rates, you hold first and see the effect. But if the rate is consistently declining, but even at a slower pace, you may decide to bite the bull, take the bull by the horns. But one other variable that I'm going to be watching is the exchange rate. We think that the exchange rate is playing within the trading range of 1550 to 1600. I don't think it's going to run away. If that exchange rate stays stable, if the price of diesel and petrol begins to decline, it is possible that there'll be comfort in saying, okay, let's bring down interest rates so that there will be increased investment, stock market will rally. And the Financial Times has an article today that Nigeria is one of the markets now that investors are flocking into because of the tariff war, because Nigeria seems to be insulated from the tariff effect, right? And that, for the Financial Times to say that, it's quite significant. So one, short-term investors, portfolio investors are coming in. Two, we are seeing a trend towards disinflation. We are seeing stability and appreciation of the exchange rate. And generally speaking, if that is the case, and it is consistent, then we might be heading somewhere positive. However, the thing about this whole thing is that we have what they call reform fatigue. 2 years after reform, you normally run into the fatigue. When the fatigue is there and the pressure is building from special interest groups, then you begin to see the risk of ideological backsliding, where you now begin to go back on the reforms because you are afraid, for political reasons, not to move forward. So that's where we are. So if the price war between NNPC and Dangote was to end abruptly, and the price of petrol was to stay where it is, if the exchange rate was to move negatively again, and if certain things in interventions take place, we might have an abrupt stop to this positive move. But I don't think so. I think that rather than having an abrupt stop, you are going to have some slowdown, right? And Nigerians will absorb it. But it is how to translate this into the welfare of the people. That is where the problem is. How do you get it across, because at the end of the day, it's about the welfare of the people. It's nothing else. It's not about happy people, happy statistics and unhappy people. No, it is about getting the people to feel the effect and feel better. So if you wake up and say, this week that is starting, right, I think it's going to be better than last week, then the economy is working. But if you are afraid that this week that is coming is going to be worse because of traffic congestion and all of that, then the economy is not working.
Right.
That is the true test. How you feel and how you think the future is holding, what the future holds out for you.
Right, so let's aim for happy data and happy people.
Yes, that's what.
Thank you so much. Always great to have your perspective.
Happy birthday, Daddy.
Thank you so much. Yes, it's another birthday again, and yeah, definitely hoping that the data gets better as the age goes
happy
up.
Birthday, happy data,
happy people. Thank you so much, sir. Always great having you.
All right.
All right, we'll take a break now. When we come back, we're going to review what's been playing out. That's in the capital markets. That's a moment to stay with us.